Chakri Lokapriya, would you like to talk about it? Good afternoon first, and then your comments.
Good afternoon, Nikunj. It's a very important topic that you raised. Going by the, right from April 1st onwards to now, the various, goalposts have been changed by the US government. So, July 9th, I believe, again, will be a goalpost that can be changed. Because like you rightly mentioned that, this is a very complex negotiations and a number of countries are bilateral agreements with each other. India with UK, India with EU, India with US, and like that, so many permutations and combinations. So I think for the US, they need deals really with only about 18 countries, which are significant to the US. But it's unlikely that going by what has happened in the last 2 months, that they'll reach any kind of a deal, and each country will get its own extension. I think that's where we're headed to, and therefore the market will be waiting, watching for until each thing happens.
I just feel like talking about cement right now, and just hold your breath here. We look at 10-year charts here. Something, sometimes good to talk history. 10-year chart of Ultratech, 10-year chart of ACC, 10-year chart of Shree Cement. Kunal, tell us. 10-year chart of ACC, 10-year chart of Shree Cement, 10-year chart of Ultratech.
So I think ACC, for example, that stock 10 years back was around 1500. Okay. Right now it's at 1850 thereabout.
So ACC in 10 years has not given you any return. Yeah. Even the Holcim was owning it, which is one of the biggest and the most efficient cement company in the world. And Adani has been owning it from 3 years now, almost 3 years now. So all that assumption that, okay, big corporate groups have come in, efficiency would kick in, it's not worked out. Let's look at Shree Cement.
Ultratech Cement, that's moved from 3,000 to now 11,500. So it's almost
which is not
4x.
Which is like slightly better than markets.
Yeah.
Slightly better. Now let's look at Shree Cement. And Tino Cement, yeah? Same cheez.
Yeah. Shree Cement from 10,000 to almost 30,000 right now.
Yeah. So just think about it. I mean, how underperforming cement stocks have been. How much they have underperformed, even though the GDP in 10 years has gone from 2 trillion to 4 trillion. Real estate is in a bull run. Road is in a bull run. Capex has done rather well. Infra has done rather well. The roads and everything has done well. The sector has seen massive consolidation. Smaller players have got out. Ultratech has just about bought every small player, and ACC and Ambuja have bought the remaining players, and the players which are there now have such small capacities that they cannot call pricing power. I think Dalmia Cement also has gone through an M&A. They've taken a Capex change. So the mystery of cement continues. Chakri?
Yeah, you raised a very good point, Nikunj, which is if you look at cement companies in the last, let's say, 7 years or 8 years, they've had hardly any pricing power. Their price increases at best have been way below inflation. And, thanks also every now and then the government saying that, the cement prices should not be increased. And second, because there was competition, now you have 2 large players. But that's another reason which contributed to the lack of this market-beating returns for cement as an industry. Now we have to see with Ultratech and ACC, becoming the 2 large players, whether they'll show some signs of pricing power.
We appreciate that view. We'll slip into a very short break and we'll talk about the last 15 minutes of trade and keep the discussion going with our experts on the other side when we return. Hi there, welcome back to Closing Trades. Now, in light of the recent geopolitical developments that have been taking place, a lot of conversation has been centered around crude, but we also need to focus on a very important crude derivative, that is fertilizers and chemicals, because remember, Iran's biggest export to India is chemicals. Now, the government has reviewed fertilizer availability amid ongoing Israel-Iran tensions, and the ministry has found sufficient stock and supply chain to meet current demand. Prakash is joining us with more details on this. Prakash.
That's an important development coming in as we're learning from our sources that the government has reviewed fertilizer availability amid ongoing Israel-Iran tensions. A very significant development coming in. Our sources are indicating that the issues such as supply chain availability pricing and transportation costs were discussed, and Ministry finds sufficient stock and robust supply chain at this point of time to meet domestic demand. A very significant development coming in. Along with that, sources are also indicating that there is no immediate concern over availability of NPK category fertilizers. In fact, Ministry has asked the companies to ensure sufficient import to meet domestic demand going forward. But the pricing remains a major concern for the companies at this point of time, as NPK category fertilizer prices have witnessed a significant rise in last 1 month. In fact, raw material prices have increased by almost 13 to 15%. When it comes to DAP prices, it has seen significant surge as well, where DAP prices have increased by more than $150 per ton in last 3 months. Therefore, pricing remains a major concern for the companies, but the ministry has urged companies to make sufficient import to meet domestic demand, and a government will offset the increased cost by increasing subsidy allocation going forward. A very significant development coming in. The process has been initiated, and these efforts are being made to ensure sufficient availability of fertilizer at affordable prices. Back to you.
All right. Interesting. Chakri, what's been on your shopping list of late, and where are you looking at taking some chips off the table?
Clearly, everybody's favorite is ours too, which is banking has done well. I think it will continue to do well. The valuations are in its favor. All those things that RBI has done, cutting rates, 100 basis points, liquidity, reducing provisioning, all these help. And still, banks' valuations are still very reasonable. So what is needed to take these banks up is, with all these actions, hopefully the earnings for corporate India will bottom out and start picking up. On the other hand, the companies like railways, which used to be so boring a couple of years ago, have become so attractive at their growth potential. Titagarh is now talking about a 35% plus revenue growth. And these are real orders and the multiple sources of orders. And, defense is done phenomenally well. We all know that. Still, there are pockets of defense, because now defense has become such a fashionable theme worldwide, whether it's Bharat Electronics or Data Patterns. These companies are still valuation-wise okay to their order book.
Data Patterns, again, just one of those stocks which has just hit out of the roof. Where is leadership in this market, Kunal? We're trying to understand that.
In terms of sectors?
Any stock also. Reliance showed a lot of promise, but then last 1 month it's just gone thanda.
In fact, the major reason for the index falling down today, Nikunj, was Reliance Industries, because that stock I think ebbed off some 2%, 3% from the intraday highs. So I think what we can, we did a sector-based analysis on how the indices have moved in the last 25-30 days of this consolidation, which are the sectors which have actually done reasonably well. So one of the sector, of course, is banking financials, which has started to look attractive. They've done reasonably well. From the other sectors, media is something which has been looking attractive. I think Z Entertainment, there are a few other names from the media pack which are looking attractive. Of course, they don't have any major weightage on the index as such. From the other sectors, you had defense stocks, which or PSU themes which had largely done very well. Many of these defense stocks and the PSU names had come back to their, I think multi-month highs. Some of them are already at multi-year highs for themselves. So these are the only set of stocks and sectors which have actually looked very attractive.
Okay, so that's the take from Kunal, but time now to get in some BTST ideas. We'll come to you, Vinay, first. What's looking good on a BTST basis? Where would you be placing your bets?
Yeah, so I would pick a stock from the FMCG space. After a long time, you can see some strength coming back, and FMCG is a sector which has not participated well in this entire year. And I think I see some oversold territory in some stocks. Dabur has reversed, so Dabur India looks good for the BTST or 1 or 2 days trade. 474, 475 should be the entry. 465 should be the stop loss on the upside. I'm expecting a target of 490. Second pick, I would take it from the fertilizer and chemical space, which is Chambal Fertilizer. It has witnessed a sharp fall from the higher levels, and now it is trying to find support near its 200 days exponential average and bouncing back. So Chambal Fertilizer can be looked at 562. Stop loss can be kept at 550, and on the upside, I'm expecting a target of 580.
Fall of 1%, 250 points off from the day's high, below 25,200 but above 25,000. That is the construct of the market. You may look at the market from the day's high and say, okay, we were hoping for a breakout, it has not happened. But you look at the market in totality where we were yesterday with crude at $80, I think the markets have done well for themselves. And I am optimistic. It's a glass half full approach which you should have in this market, Kunal.
Yeah.
Glass half full approach is a better than glass half empty approach.
Yeah.
So what, we've not crossed 50, 25, 200. So what?
No, Nikunj, you look, of course, you look at in this manner in the last 2-3 months, we've almost negated of the pain the markets had seen in the prior 5-6 months of a major correction. You know, from September 2024, it was small caps, mid caps, large caps, nothing was spared. And then in the last 2 months, from I think March or April first week somewhere, you know, is where we've seen the building blocks from 22,000 marks up 22,000 levels, for the index to come back to 25,000 mark, stay at this level for the last 25-30 days, even at a point when there has been so much happening across the geopolitics as well as, you know, the global news front in terms of tariff, etc. So that, I believe, is a win-win situation for the market. So, you know, if the markets have that capacity to digest so much of happenings across, you know, the news flow, global, domestic, etc., and still stay at a particular level, that itself would be considered as a win-win situation for the markets.
You know, when you look at the weather app, it says the temperature is at 34 but feels like 36. That is the market for you. We may not be at an all-time high, but a lot of stocks are making you feel that the correction never happened. In the month of May and March, the ugly correction what we saw, that is now history. So sometimes the temperature does not give you the accurate feeling of how are you feeling. The Nifty today is not giving the accurate feeling of what is happening in the broader market. I think that is for me the punchline. Vinay, let's get a closing comment from you also on today's market action.
Yeah, so as you said that we have come down from the higher level, but the view should be we should take an optimistic approach as we are closing over 25,000. And as far as broader market is concerned, still more than 50% of the NSE 500 stocks are trading above their 200 days moving average, and more than 74% of the stocks are trading above their 50 days moving average from the NSE 500. So broader market is still bullish, we can say positionally. It's just that we are passing through the consolidation, waiting for the breakout to come. But till yes, selective stocks can continue to do well, and 24,700 should be the stop loss in trading norms.
I appreciate that view and appreciate you joining us along with Chakri and Kunal as well.